This is our Gardner Business Index for composites fabricating. This is a compilation of data that we collect through surveys each month. It's basically asking various fabricators, are business conditions up, down, or the same as in the prior month? We collect several hundred of these surveys each month from across all manufacturing disciplines. And you can see here in just the last several months, we're below 50. That 50 line right there represents no change. One of the really great things that we do about this data, and it was something that was talked about just previously, is understanding the landscape. There was a gentleman who said, where is it? The future is here, but it is unevenly distributed. I thought that was fantastic. And our data really allows us to see that landscape. And this is just one example of that, because here I'm looking at the total index, but by company size. So we can see here how are large firms versus small firms experiencing macroeconomic trends. And just so you know, in green, the green is the larger firms above 100 employees in size. The yellow is smaller firms below 50 employees in size. And so you can see here how they've experienced the last several years of economic conditions differently. Oh, there we go. That's new orders. So up here, you've got your manufacturing technology, the component that we're looking at, and then the breakout. And I've got my legend up there. So you can see how that works. New orders for larger firms continues to do well, but we're seeing certainly some recent weakness on the smaller size, by smaller size firms. Here on the export side, so this is what you just saw was total new orders. This is just the export component of that. And so export orders have been down the last several months. One of the other things we do is, aside from breaking out the data by size, we also break it out by end market. And so here I've got a selection of end markets of interest to us. I've got automotive and aerospace on there, of course, but you can also see some of the other interesting ones I put on electronics. So that's a consumer electronics and any sort of industrial electrical manufacturing as well. Again, this is only among those fabricators within the composite space. So again, prices received here, and this time here, not by company size, but by which end market you're serving. And so you can see here, interestingly enough, you're seeing more pricing power on the side of the fabricators and composites manufacturers serving electronics versus, of course, you can see aerospace. There's maybe a little different dynamic there between supply and demand and how much you can push through, when you have a much smaller pool of buyers there. And then prices received. This is a really interesting chart. As I go around and share this data with firms, they're always surprised to see, especially if you're a smaller firm, a lot of those firms tend to be more hesitant to increase prices. And we find that sharing this kind of data with them, letting them know when their larger peers are pushing through price increases on their customers, can help them better time when they're pushing through their own price increases. I've seen firms that look at this kind of data and say, darn it, if I had known that back in January, my larger peers were pushing through price increases, I wouldn't have sat on the fence. I hear that a lot. A lot of the smaller firms don't always know what's going on with their larger peers. If they did know, it would give them a big advantage in how they strategically price and market their products. So this is an interesting one. This is our financial slide. So we've got here, so on this one here, this is revenues. I have right around 30 different firms I'm looking at in the aerospace and defense sector. And what I've done here is I've got the 29 essentially are the green line in the total, or the 30. I then remove Boeing and I come up with that yellow line up there. And the reason I've done that is because in the last year, of course, Boeing being such a huge player in the market has really messed up, I think, a lot of what we expected to see in this industry. And so when you look at this line here, I believe, as I recall, if you remove Boeing from the industry grew 9% this year. If you throw them back in and you look at where we are on a 12-12 rate of change, you're down about 2%. And of course, you can see here, this is just Boeing's revenues pulled out right there. On capital expenditures, Boeing is one of the nice things that we see within their data that they're reporting is that they're fairly level set on their CapEx. A lot of the rest of the industry does a lot more CapEx spend. At least they expense it in the fourth quarter. So you see that seasonality. But overall, total CapEx spend, and I have it trended here to get rid of that seasonal component, continues to do fairly well. And then you just have earnings, right? So Boeing went from contributing roughly $4 billion a year in EBITDA to the industry to, it was a $2 billion loss here in the latest quarter. And you can see how that affected the overall industry. Again, if you were to remove Boeing from this, the growth numbers look really good for the industry. On the rebound, you're going to see a 15% increase in EBITDA for the industry. And then after that, after 2020, assuming that the 737 issues are resolved and that the 787 concerns around their oxygen deployment system have no impact on these numbers, you'll see the industry essentially level set around 7.5% EBITDA growth come 2021. So profit margin, I wanted to show you this chart because of the importance of rockets and the space side of aerospace. But it's been interesting to look at Aerojet Rocketdyne just as one example because they're one of the few publicly traded firms out there that's really more of a pure play on the rockets and space side. But you can see that their profit margin has gone from right around 12% in 2013, and they're approaching that of the Boeings and the Airbuses, which is north of 25%. So I think that says a lot about what's going to happen in the rocket space come 2021, 2022, and so forth. The one thing I do want to note here, of course, is that the biggest players are still privately owned. The SpaceX's, the Blue Origins, a lot of those other guys out there. We don't have their data, but I suspect that that's a significant source of opportunity for all of you. Thinking back to what you've seen today, right? Couple of messages I want to get past you. First, again, is that aerospace is going to be a rate game. How are we going to use technologies? How are you going to use manufacturing technologies, right, to keep the quality where it needs to be, but to get the volumes where they need to be, right? And we showed you through the Top Shops data that we have a lot of firms that are already making those investments in RTM and compression molding, that they're getting the cycle times down. We've seen the new GMC truck bed, the new Tesian product where they've got a 1-minute cycle time. Those are going to be where we're going to have to head to. Looking at the automotive sector, I'm excited about that sector for this group because the marketing message for electric vehicles, where weight is essential to range, right? It's moving away from just being an environmental statement to being a performance statement. Now, I don't know about you guys, but I'm on the street side of this hotel, and all night I heard guys like just shooting down the street, regardless of what size vehicle it was. It could have been a hot rod, it could have been a pickup truck, but it's like performance still means something in this country, and there are a lot of people clearly willing to pay for that performance. I think that gives this group a really good incentive to go back to those automotive manufacturers, those clients that you can get a hold of and say, look at, this is no longer an environmental statement. This is a performance game. And everybody knows that performance is a lot easier for a GM and a Ford to sell. That's what they've been doing for decades, is selling performance over environmental. They know how to do that. Let's get in there and partner with those guys from that perspective, right? I can give you an SUV that's going to smoke a Corvette. That's where the market is moving, right? You can have amazing performance without having to buy a sports-specific vehicle. It's going to be a really interesting time in the next few years.